Hey traders, welcome to this week's Forex Focus. What we're going to do in today's show, as we are going to do in every show, is we're going to look at the major currency pairs and look at the opportunities that are setting up in them for the week ahead. So to give you an idea of what direction I feel the markets are going to move, so that you can then try and incorporate that into your own trading. Now, remember, this isn't investment advice. I'm not telling you to go and take any of those trades. I'm simply highlighting opportunities for you, and then you have to go away and do your own analysis and see if it fits in with your particular trading strategy and your trading approach. Now, last week we were looking at essentially we're looking at a little bit of a bounce in the currency pairs. We'd seen a lot of dollar strength in the previous weeks and months, and the markets had gone over to, in most of the currency pairs, to some very major levels where we thought we would see a bounce, and that's what we saw last week. So the US dollar pretty much got sold across the board. However, going into this week, it looks like there are now some opportunities to start buying into it, so to start selling those rallies in the currency pairs. So if you take a look at the Aussie dollar that's in front of you here, you can see that we're looking at a chart where it sold off quite a lot. It has bounced, which is what we were talking about last week, but it's now coming up to previous areas of support, which could act as resistance. Now, from a fundamental perspective, and I know that I said last week that we're not going to delve too much into fundamentals, but essentially from a fundamental perspective, I think that the markets are a little bit worried about what Trump's policies are going to do for the dollar. He had this sort of like weak dollar policy in his last term in office, and the markets are a little bit afraid of that. But all of that aside, and you look at what's going on in the other regions of the world, I still think that the US dollar, at least in the short term, is going to get a little bit of love, and we're going to see some strength in the US dollar, even if it's not going to be sustained and going towards, the second quarter, second half of this year, we start to get a little bit of a reversal of this trend. I still think that selling rallies in the majors like the Aussie dollar, so betting on dollar strength, is probably the best way to go for the moment. So the Aussie dollar, as we can see in front of us, there are two levels that I'm paying attention to. The first one is a 0.6349. So this area over here, which is a previous level, this big spike low over here on the 5th of August. So it's a previous level of support there that could act as resistance. And that's the first area I'm going to enter into a trade. Now, the way that I trade the markets, I don't just take one trade. I build into a trade idea. So I could have several trades in a particular currency pair. And that's why I've identified this level above over here. So if the market does get back up to this area of support over here, which is the low from the 14th of February last year, so nearly a year ago now, at 0.6445, then I would look to initiate another position. The way that I trade is I usually look for an immediate bounce off of a level, so I'm not looking for any confirmation from these levels here. However, if you do want to look for confirmation, you could look for a bearish engulfing candle at either of these levels, or you could drop down to a shorter term time frame and wait until you get sort of like a 1, 2, 3 reversal and the market start to trend in the opposite direction. So you can see here that the moving averages have started to cross over and the market looks like it's trending to the upside on a shorter time frame. So what you would do is you would wait for this to actually reverse and wait for the market to start trending to the downside again, and then start getting short based on that. That may be a more of a conservative approach, but it will mean that you get in later to the market. So it's just one of those things that you need to take a look at to see what makes most sense for you. The next one is the euro dollar, and actually you're going to see with all of these pairs here, they're very, very similar setup. So the euro dollar, we're at a previous level of support. If we go back over here, it's actually a support zone because they're levels very, very close together here between the 1.0513 and then the low down there at the 1.0455. So you got sort of like 80 pips within that zone there, which means that you can short pretty much immediately, or as I just said, look at the shorter term time frames, so jump down to the 4 hour and at least wait until the shorter term moving average. I've got the 10 and the 200 here. The shorter term moving average moves back below the 200, just kind of showing you that momentum has moved to the downside. If the market doesn't turn at this level here, I will be looking to put in a second entry up at 10660. Now, one of the things you have to understand with the way that I trade is that this isn't a doubling down or a martingaling or anything like that. It's a way that you approach the markets where you're looking at the longer term value of a currency pair as opposed to trying to predict the immediate short term direction. You see, a lot of traders, they come unstuck because trying to predict the very, very next move can be difficult, but picking the general direction is something that is a lot easier. It's a lot more predictable. And I find that I get a lot more success doing it that way. And the traders that I work with, they also get success in trading that way as well. So what we do is we have a portfolio of trades. So if, for example, we wouldn't trade the Aussie dollar, the euro dollar, the pound dollar, all of those correlated pairs all at the same time, we would pick one that made most sense to us, and then we would build into that. So we would have several positions across one currency pair, as opposed to splitting, having several positions across different currency pairs, but they're more being correlated. Okay, so that's the euro dollar. If we then move on to the pound dollar, similar sort of setup again. If I zoom out here to the daily, you can see we've got some big levels in here. So we've got this big low from the 22nd of November last year, which the market has now got to. So if you're taking an immediate bounce from here, you could literally do that because the market is touching that level now. If not, then you wait for the shorter term time frames, or you could wait until you get a deeper pullback if you only wanted to take one position, as opposed to doing what I just said to you just there, which is have a portfolio of positions, which I really suggest that you should look into. But the second opportunity would be at 1.2675. Okay, so if the market gets through this level over here, this is going to be the next level that we're going to look to short at. Moving on to the New Zealand dollar. The market isn't quite at an area where we want to short at the moment, but it is moving towards that level. Now, frankly, New Zealand dollar is one of my favorite opportunities at the moment, because I think that New Zealand, the data out of New Zealand isn't particularly positive. I think that the New Zealand dollar is going to be one of the weaker currencies in 2025. So I think, we're probably most likely going to get, a bigger bang for our buck trading in the New Zealand dollar than perhaps we would in the pound dollar or the euro dollar. Because, take the pound or the euro, for example, they've got things that potentially could be positive for their regions, which would mean that, going short those particular currencies might give you a bit more of a roller coaster ride than something that I feel is more straightforward in the New Zealand dollar. Having said that, I think we'll get dollar strength generally across the board anyway. But if you're looking for, one of my favorite opportunities, it's this one here in the New Zealand dollar. So the first level you'd look to short at is 0.5771, and the second level is just above there at the 0.5850. But, in either case, I think you've got a good opportunity to make money here, because I feel that it's unlikely, it's not impossible, but it's unlikely that the market comes all the way down like this and then rallies all the way up like that. Even if it were to rally to the upside, I think you get more of a harmonic price pattern. So you're more likely going to see something like this rather than that straight line over there, which would give you an opportunity to take profits on your trade, even if the market moves in the opposite direction. In terms of the stop loss, generally speaking, we're looking at around a 2 ATR on each of those. The second position. The first position, the stop would be above the second level, so 2 ATR above here, so about 100 is 53, 54 pips, so let's call it 110 for a 2 ATR there. So from this level here, 0.5850, we would be looking at a stop somewhere around 0.5960. So a lot of wiggle room in there, a lot of opportunity for the market to make you right and to ultimately pay you, which is what we want. Okay. Moving on to the dollar CAD. This one's a little bit different. So whereas the others, we've had a nice pullback, we've got some good levels to trade from, the dollar CAD has been consolidating at the top of this range here. Now, I think if the market breaks below 1.4266, that could open up a move down towards if I put this in here, the resistance level at 1.3952. So this previous area over there, that's where I'd look to become a buyer. If the market breaks out above this level here, then that will give you a breakout to the upside. However, I think looking at the other opportunities, they look better technically. So this one over here, I probably wouldn't entertain a break to the upside. I want to see a deeper pullback down towards the 1.3946 before I really entertain getting into the dollar CAD, particularly as there are much better opportunities out there at the moment. The dollar franc, so I think this is going to be a good one actually, because the franc at the moment has seen some strength as it's a bit of a safe haven currency. But generally speaking, the franc would be a funding currency. It's got some fairly weak fundamentals at the moment. And as you can see, if you look at the franc pairs, maybe not on this one so much, but the franc is really sort of like, it's done pretty well over the past year or so. And I think that there's an opportunity really to kind of play that reversal. This already started reversing here, as you can see. So there has been some franc weakness, but generally speaking, the franc has been quite strong for a little while. You don't see this in this chart over here, not in the recent history, but if you look at some of the other franc charts, so like, pound franc, for example, etc., you would see it play out a little bit more over there. But with this one, what I'm trying to say is that I think that the franc is going to be one that, when the world starts to recover a little bit, I think the franc is going to suffer, not only because of weak fundamentals, but it's got a low interest rate. And that's why I think that ultimately that will unwind. So looking for a bounce off of 0.9039 and then a further break to the downside from 0.8927 will be the second area that we're looking to buy from. The final one is the dollar yen. This one is a little bit trickier because the Bank of Japan, even though they don't do anything quickly, if you look at the way the interest rates are going, the Federal Reserve are cutting interest rates, although they may not cut it as much as we think now. But the Bank of Japan are looking at tighter monetary policy, which could mean that that we aren't going to see as much yen weakness going into the second quarter of next year. But at the moment, I would still look to buy from 152.10 and then below there at 148.70 would be the areas that I'm looking to buy from. But the caveat to that is it depends when we get down there. If the market kind of rallies from where it is right now and then it gets down there from all the way at these highs, the fundamentals may have shifted or started to kick in from that point, where we'll start to see a bit of a weaker dollar across the board. And if we see that, then I don't think that I'd be looking to buy into that. Then it will be changing to more selling rallies rather than buying dips. Okay? I hope that makes sense to you all. If you've got any questions at all, please feel free to post it beneath the video. I hope it's useful to you. As I said, it's not something where you have to go and take these trades. I'm just trying to give you a bit of an idea as to the general directions of the markets, and then you can kind of weave that into your trading. So if you haven't subscribed to the channel, please make sure that you do subscribe to the channel. You hit the bell so that you get a notification as and when I release these videos, and also you give the video a thumbs up, and as I said before, please feel free to comment beneath the videos, ask me any questions that you have, and I will do my best to answer them. Okay, thanks so much for watching, and I will speak to you very soon. Take care now.